back, and thank you for watching Smart 24 TV. Now, the central bank rate is one of the things that the central banks around the world look at in order to tame the inflation that we're seeing globally. Now, this coming week in the United States of America, the Federal Reserve Bank is going to sit for another policy committee meeting, to which many speculators have said there is going to be another hike of the Federal Reserve interest rate. Now, markets are facing another hefty interest rate hike in this week ahead of this policy committee meeting against the stubborn inflation. Now, investors will be squarely focused on the Federal Reserve for the two-day meeting, which is set for the 20th to the 21st of September in this week, where officials are expected to deliver a third straight 75 basis point increase to their benchmark policy rate, that is after their discussions last Wednesday at 2 p.m. Eastern Time. Now, Wall Street will also take its cue from the Federal Chair, that is Mr. Jerome Powell's speech, in which, of course, he said that in the aftermath of the event, along with the economic projections of the United States, the central bank members, and the latest dot plot showing each official's forecast of the central bank's key short-term interest rate. Now, in the updated projections, they look for revisions and in the directions of less growth, the higher unemployment, and a higher terminal rate, yet they expect the inflation path to remain largely unchanged, according to analysts of Bank of America, led by Michael Gapen. And of course, they wrote on Friday that to their eyes, this would suggest risks that are going to be a hard landing and rising through. Of course, though we expect the median number of forecast to be a soft landing. Now, the readout of the Federal Reserve expectations may determine whether markets get relief from a recent sell-off or extend sharp declines. On Friday last week, all the three major averages logged their worst week since the month of June. The benchmark S&P 500 shed off over 4.7% in the week ended September 16th last week. The Dow Jones Industrial Average also fell by about 4.1%, and the tech-heavy Nasdaq feature, that is the Nasdaq Composite, tumbled by about 5.5%. That was realized as a decline on the New York Stock Exchange. Now, hotter than expected inflation data earlier this month sparked a new wave of pessimism about the United States Central Bank rates hiking campaign and its potential to significantly stunt the growth of the United States economy as well as the world economy. Now, the consumer price index in August reflected an 8.3% increase over last year and 0.1% increase over the month prior, and the Bureau of Labor Statistics reported Tuesday. However, economists had expected prices to rise 8.1% over last year and fall 0.1% over the last month, according to estimates from Bloomberg. Now, Wall Street's heavyweights, including the Bank of America, the Goldman Sachs, and Nomura, have all lifted the interest rate projections immediately after reading, while raising expectations for a hard landing and a sharp downturn following a period of rapid growth there in the United States economy. The Goldman Sachs warned on Thursday that the stock markets may plunge another 26% if the Federal Reserve's rate hiking campaign triggered a recession. If only a severe recession and a sharper Federal Reserve rate response to deliver will tame inflation, then the downside to both equities and the government bonds could still be substantial, even after the damage that we have seen already. Now, elsewhere in the coming week, a lineup of housing data is on the docket, with gauges on building permits, housing starts, and existing home sales all set to be closely watched. Releases will come after mortgage rates surged past about 6%, surged by 6% last week, and the highest level since November 2008, exacerbating already rampant concerns around affordability. Now, on the earnings calendar, results are due out for headliners, that is including the FedEx, as well as the Lena, General Mills, and Costco, as well as Darden restaurants. Shares of FedEx plunged 21% on the 16th of September. That was last Friday, wiping out over $11 billion in the market value. That is for the shipping, again in its worst single-day drop on record, after the company warned of a global recession in the ugly earnings pre-announcement. Now, FedEx also withdrew its full-year guidance, citing macroeconomic trends that have significantly worsened. Now, the logistics giant's messaging could be a sign of what's to come as investors inch closer towards the next earnings season, with many strategists sounding the alarm on earnings expectations for the remainder of this year, which are highly pessimistic. Now, according to the data from the FactSet Research earnings, the growth expectations for the S&P 500, which is one of the biggest features there in the United States, stand at an average of about 3.7% for the third quarter, down sharply from the expected 9.8% growth at the end of the month of June. Analysts have cut the third quarter earnings expectations over the last 2 to 3 months for every sector in the S&P 500 except the one for energy, and 7 out of 11 sectors in the index are now expected to show outright year-over-year declines in the earnings compared to 3 in the last quarter, that is in the second quarter of 2022. Now, in a note on Friday, the Bank of America's Michael Hartnett said that the earnings that are going to be the earnings per share recession shock could be the catalyst of the new market lows, pointing to FedEx message there. And that is, of course, an outlook of the economy in the United States. Things are not yet so good. Much as here in Uganda, we are seeing a slight decline in prices of stuff, especially following the slight decline in the price of fuel. However, on average, and this is a very important word when it comes to financial markets, on average, we are still seeing the effects of global inflation, and we shall, of course, await the Federal Reserve meeting, the Federal Reserve Bank Policy Committee meeting this week on the from the 20th to the 21st of September. Of course, we are supposed to be concerned about this rate because it communicates a lot about the global economy and the health of the stock markets around the world, which we shall, of course, keep looking at. Now, moving across to our bonds and bills here, our own central bank rate has been increased several times by the policy committee meeting and currently stands at a 9% point. And we're seeing that we saw the committee come up with from 6.5 to 7% and then to 8% and now up to 9.0%. Now, when you look at the value of the Ugandan government bonds that are issued on the capital markets secondary activity, within the second quarter, we have seen an increase of over 67.4%. That is from 9.7 trillion to over about 16 trillion within the second quarter, comparing the second quarter to the first quarter. The rise in the value of the treasury bonds in the secondary market demonstrates the high appetite for Ugandan government securities by investors due to the high yields of return, the high yields in the return of their investments. The Uganda Capital Markets Authority quarterly bulletin also indicates that there was an average monthly turnover that grew to 5.4 trillion from 3.2 trillion over the previous period. Now, as we wind up the third quarter, you can also do your own expectations. What are your expectations for the yields on the bonds and the bills for the next quarter, which is the fourth quarter? And usually this is one that is looked at as the final quarter of the year, and definitely people have very high expectations of the yields. And of course, following government's central bank rate increase, we still even expect much more returns there from our investments on the debt market here in Uganda. When we put that aside, we are seeing that on the cryptocurrency market, there has been projections that we have over 12 million crypto owners in East Africa. Now, the crypto market is revamping after a slump that so many investors suffer losses worth billions of dollars early this quarter, in the month of June. Now, the market or financial research institutions estimate that the number of crypto owners in East Africa is currently almost 12 million subscribers. AAA, which is a Singaporean cryptocurrency research firm, estimates that about 11.7 million East Africans own cryptocurrencies, and about 6.1 of these, 6.1 million are from Kenya, and about 2.3 million from Tanzania, and about 2 million from Democratic Republic of Congo. However, it's not clear how many hold the currency in Uganda. These figures, according to some analysts, are painting a picture of society well informed about cryptocurrencies and dominantly financially literate, which is not the case, of course, according to reports from analysts. Mr. David Gitonga, the founder of Bitcoin Kenya, a blockchain and cryptocurrency media center that is based in Nairobi, in engagements with the paper in Nairobi, say that with people in the region, with their engagements with people in the region, there is a revelation that there are actually fewer cryptocurrency holders, and many of them have no utility for the currency. And so there's need, of course, for us to get to learn more about this cryptocurrency. Here in Uganda, earlier on in April, there was a 29th April circular from Bank of Uganda that suspended transactions from mobile money to cryptocurrency and vice versa. And tomorrow we are going to host a gentleman who's going to talk a little bit more about cryptocurrency in Uganda, and we shall also break down something that happened to Ethereum last week. Ethereum is one of the biggest cryptocurrency coins, only after Bitcoin, and there was something that happened last week that you might be interested in knowing about the currency. I'll catch you, of course, next time, tomorrow, when we talk about this topic in detail. Thank you very much for remaining with us since the beginning of the show. My name is Anthony. You can follow, and of course, you get feedback from me and the team here at Smart24 TV on Twitter, as well as our live stream at Smart24 TV Live. That's it from me and the team for now. Have a good day and goodbye.